Okay, let's look at the Euro USD and look at some of the entries that I've taken from the 18th of October up until the 22nd of October. You can check the YouTube channel as a reference and see the daily forecast and live analysis that I did for the members and all the trades that I've taken and missed and why. So this was a really good week. So first of all, main structure is done. These bank levels and imbalances, that's just for the future. Obviously, when there's maybe a larger pattern such as this, then okay, then they might come into play. But at the moment, this is there as a reference, not really needed. Let's focus on what's relevant. Let's zoom in. Structure is done on a daily. All these bank blocks and imbalances, they're pretty old, to be fair. They're complete, so you don't really need that. Let's remove that. Let's focus on the relevant piece of price action. So if we go to the 4-hour time frame, what can we see? I'm not worried about the bank levels and the banker blocks above. I'm more interested in what's relevant down here. So let's go to the 1 hour. Analysis is complete. So these are the trades I've taken with the members on YouTube. So this one in particular, I missed this entry. It was 6-7 in the morning, and I don't really trade in the morning. My trading hours are from 1 p.m. to 6 p.m. and it's just a strict set of rules. Every now and again, I'm going to miss these trades, but it is what it is. So this was a forecast that I did with the members on the 18th, on Friday, the 18th on a Monday, and I did forecast it, didn't take it because it's my rules, right? But this is the perfect boomerang, and the perfect boomerang in confluence with the 3 aces. So if we go to the 15-minute time frame, right? So I'm just going to be completely transparent and honest with you guys. This 30-hour trade, I never made a pip out of it, right? Didn't take anything. Check the live streams from the 18th of October up until the 22nd of October. However, these 2 trades I did take. I did generate, I believe on this one, hold on. This one was 15.2R. And this was 4.2R in the space of 24 hours. So I hit 15R in one trade. The next day, 4.2R. That's basically 20R in the space of 24 hours. And I do it step by step on the live streams, right? This one I did not catch, right? But I'm going to walk you through the beauty of it, right? So this one is just hindsight. I didn't catch it. I missed it on the live stream. Didn't catch it myself. Now let's look at the 3 aces and the boomerang. So first of all, rule number 1, we need 1, 2, and we need a 3rd tap, right? And on the 3rd tap, a few things can happen. You can either reject and then do a boomerang and then go long, or it could just go to the boomerang and then go long. But on this occasion, this was beautiful, right? We've got 1, 2, 3. We've got 1, 2, and 3, right? And we've obviously got 1, 2, and 3. And not only that, I do believe there's, yeah, there we go. There's 4 trend lines in confluence. So it's more than the 3 aces. It's just a powerful 3 aces with the boomerang because it's outside of the pattern, right? So let's tidy this up real quick. And I'm going to walk you through this particular entry. So there's a reason as to how and why you can catch these entries, right? So first of all, let's actually update it properly. Look at that beauty of a 3 aces and a boomerang. These are the go-to setups. I believe I was probably in the gym at these times and I missed it. It happened at 7:15 in the morning. Yes, I'm at gym at those times, so I completely missed this trade, but it was textbook A1 setup boomerang with 3 aces. Beautiful trade, right? Textbook. And the bank level is outside of all the patterns. So this is textbook stuff. Now let's see, how can we catch this particular trade? Now, really and truly, it went exactly to the pip, but you need to include 1 pip or 1.5 pip spread. So let's do 1.5 pips, which is where we're at. 71, so 72, 73. Okay, this is the realistic entry. And then we do 1.5 pips above, below, sorry, 4, 5. There we go, boom. So this is a realistic entry. This one's already done. That was the live entry. And again, this is the target. Okay, this is a 17er. So it wasn't 30er. This is why you need to do the spreads accordingly. So, okay, so we've identified the fact that price is yet to form a 1, 2, and 3. And we've got a pattern on the third tap. Beautiful, beautiful, right? So let's zoom into the actual entry. So this is the entry, no drawdown. Now let's go to the actual entry. And why this bank level? Why? Let's find out. Nothing on the 5-minute. Okay, if there's nothing on the 5-minute, we go to the 15-minute, we go to the 5-minute. On the 5-minute, there we go. There is our hidden bank level. Simple stuff. Go on the 1-minute. We can even amplify it some more, but to be conservative, this is our entry 5-minute, right? And our stop loss, follow structure. It made a new high. As you can see, it made a new high up here. And down here caused by this particular bank level. Now you can do two things. You can have an aggressive stop loss below the most relevant structure. This is the most relevant structure, right? Stop loss can actually go there. This is normally where I place it. If you're not sure, and if you don't have too many confluences, I will suggest to put your stop loss below the main structure. And if you're a bit of a swing trader and you don't have the time to redefine your entries, then just put your stop loss below a swing low on the 5-minute. But to be aggressive, and if you're in sync, the most relevant structure is the most relevant stop loss placement. So this is the reason for the bank level entry. So now let's go to the actual market. And there we have it. This is how you can catch these sniper entries. So in confluence with multiple patterns, right? Obviously, in terms of the target, we're aiming for the third type of the larger pattern, but we look left. Is there any relevant indicators telling us it's going to go south prior? So we do have equal highs here, but the momentum that price was rallying to the upside, it's definitely going to take out these equal highs, right? So any TPs around here, just remove it and go to the most relevant equal highs that's further above. So we can remove this. So always update everything, even the equal highs. Now, this is the most relevant equal highs that we can see here. Let's go to the equal highs. What can we see on the 5-minute? There we go. We've got the equal highs. There's an imbalance here, but can't really see it. So we go to the 1-minute. To be conservative, this is your TP1 at this area, depending on the momentum that price is approaching your take profit. If it's approaching it very correctively, definitely have your take profit at the most relevant smart money concept bank level entry setup. If there's momentum, just hold it towards the most recent valid liquidity pool based off the equal highs, okay? So if we go back to the 5-minute, as you can see, there's a liquidity pool there. On the 15-minute time frame is where you really want to look for a valid liquidity pool. So this is really, really, really important. Equal highs. You obviously do a stop one of the previous structure. When the wicks are too close to each other, it's just not valid. Yes, there'll be reaction, but you need a fair amount of a distance from this wick to this wick. This is a valid liquidity pool. The last thing you want to do is have a liquidity pool right here, then another one there, another one there, another one there. That's just not going to work, right? So just make sure you base it off the most good size liquidity pool. And you also don't want a really big one. This is the perfect liquidity pool, as you can see from here to this spike, right? And we've got plan A exit, plan B exit. So this was the reason for the target. So if we go back to the live market, and then we have it. Price obviously hit the liquidity pool. Now, when price was down here, what happened was, okay, it was ranging. My TP was at the bank level and it just formed momentum. I saw this on the smaller time frame, I do believe, at the time. When I saw some momentum, then I knew that, hold on a minute, there's momentum. it's definitely going to hit the bank level. And there's no patterns yet. Normally there's a pattern that forms. So I knew I had to be patient and wait for the pattern. So I extended the take profit. So this is something that I covered on the live stream during, I believe it was the 19th. Yeah, the 19th of October, or the day before. 18th of October at 1 p.m. on the live stream. This whole setup was forecasted live with the members, right? So this is how the perfect three aces would have come across, right? However, I did not take this one. I'm just showing you an example of the three aces with the boomerang. So let's delete this. This is done. Now let's look at an entry that I did actually take with the members on YouTube and one that I taught myself. So first of all, the perfect trade came, rallied, missed it, no FOMO whatsoever, because I know there is always a retest, right? So just take a note on that psychology hack. There is always a retest, so do not feel FOMO. Okay, so we follow structure. Follow structure, follow structure, structure, follow structure. And then finally, this is a liquidity grab, irrelevant. You still follow structure all the way across. Finally, it moved the momentum. What caused it at the time was this fella. This banker block caused the momentum. So what you want to do is set your order, but set it only when you see a pattern. That's one of my rules. You can set it blindly, and yes, it is profitable, but the win rate can decrease. But my advice is to make sure there's a pattern. So when this happened and it made a new high, go on the 1 minute to find that pattern and just take your time. Let the market come to you. Right, let the market come to you. Is rallying, regardless if it's making high highs and high lows, is irrelevant because we know it's coming here. So it could do this, it could do this, all shenanigans. Eventually, you wait for the pattern. Okay, so now let's update the pattern. And what's happening? So the pattern came here. Again, there's still no valid entry. Now already, okay, here we go. Now we can see something. What can we see? We can see some equal lows on the 1 minute time frame. So already tick, that's a big tick. We need equal lows, okay? We need equal lows. We look to the left, there is a clear banker block or even an imbalance, such as here. I never added it because this is still the same as this banker block right there. So we've got the equal lows. That's the first rule of thumb. You need to look for the equal lows. Once there's equal lows, then you look for the pattern. And what's happened? This is around 4 p.m. Again, look at the trading time. My trades always come from between 1 p.m. to 6 p.m., normally 4 p.m. That's my trading window because I've backtested every single time frame, every single market, every single currency pair, every single day to trade. And I know that my best performing days are the trading window from 1 p.m. to 6 p.m., normally on a Friday. Every now and again, yes, I will take a trade on a Tuesday or Thursday, but it's very rare. But the trading time, perfect. Look, 4 p.m. This is my trading window, my kill zone. So finally, we've got the 1, 2, 3, and we've got this potential setup, right? And then what happened is, yes, it triggered to the absolute T. It triggered to the absolute T. Yes, fair enough, there was no boomerang of this pattern, 1, 2, and a third tap. But we do know there's liquidity pools here. We know there's a bank level right here, if you can see it on the 1 minute. So this could have easily gone here. I just placed it based off the most recent conservative entry, especially because after all the confluences, it's very likely to play out. So let's tidy this up. And this was the reason for my entry right there. And if we go back to the current time, brilliant trade this was, 15R, something like that. Let's go to the 15 minute. But this was a trade I actually took myself. And then finally it hit take profit. Now, like I said before, there's gonna be a reversal so we can capitalize on that. So if we go to this particular entry here, Let's go on the 5-minute to get that clear confirmation. What do we have? There's a break of structure, which is down here. Follow the market around. You follow it, follow it, follow it, follow it. Right, follow it, boom, follow it. New high. This is the most relevant structure. Clear momentum, banker block. Simple, simple stuff. So after I hit take profit on that occasion, this setup came. Took it. Very conservative first take profit of the imbalance, and then obviously it rallies to the downside. Hit take profit, and the rest is really history. Right? Brilliant, brilliant. It was been one of my best trading weeks. 20R in the space of one day, one market, 2 entries. Fantastic. Very, very, very proud of myself.